Hello and how's it? I'm Norman Raad, the CEO of Broll Auctions and Sales, and this is the Broll Broadcast. Cities are changing. Across the world, the way people live, rent and invest in housing is being rewritten in real time. Home ownership is no longer the automatic destination for young professionals. Flexibility, community, and lifestyle are taking center stage. Today, we're exploring the rise of institutional rental living and what it means for the future of South African cities. Our guest is Justin Blen from Africrest Properties, a company building large-scale, professionally managed rental communities designed for the next generation of urban residents. This is not just a conversation about property, it's a conversation of how people want to live. Welcome, Justin Blen.
Thank you, Norm. Thanks for those very kind words.
It's our first podcast. I'm excited to have you here, Justin. We've known each other a long time. Today, I want two of us just to have a conversation, chat about your journey, how you've evolved as an investor, as a developer, and I want you to send a message to the market. I'm quite excited about listening. We have spoken. We've done a number of deals together. We've traveled this journey with you. We've seen you become possibly the most well-known residential developer in South Africa at the moment. You're present, your product's unbelievable, and I think that's what our conversation is going to be about. So relax, thank you, and it's our first one, so it's exciting for us as well, and I want you to be as relaxed as possible. So
Sure.
Justin, tell us a little bit about Africrest and yourself and how it all started and all began, and you can talk a little bit about your partners, because I know all of you, but I don't think everyone does.
All began about 20 odd years ago. It was a rainy day at Wits University. I was standing in a long line to register for second year BCom LLB, and I was impatient in the line, and I just finished reading a book called Rich Dad, Poor Dad. And the whole story there is try buy one apartment to get passive income and just build it from there. And I was standing in this line and I thought, well, I heard things were happening in Braamfontein and inner city, and I was at Wits. So I drove out I thought, I'll come back to Wits later to register. And I drove out, and the very first building had a for sale sign. And the story goes from there essentially. We never ended up buying that building. We ended up buying another building. We bought it with almost no money. There were three partners at the time. We each put in, I think, 50,000 Rand. So 150,000 Rand was the only startup, like seed capital we ever put into the business. And it's all grown from there. And it's been a remarkable journey. We started in Braamfontein. We were making C-grade office buildings into A-grade office buildings by, let's call it Braamfontein standards. We then moved into the northern suburbs of Joburg, still in the office space. And from there, we went into the residential space, which is another story. We can get into that, why we went into residential and what the drivers of that were. But that's okay. Kind of how we got started.
So, Justin, that's a brave start. You went into Braamfontein as a student. A student age being 19, 20, and you bought your first property as an investor with some kind of foresight and vision and idea of what you wanted to do. That's remarkable. But I'm saying it obviously didn't happen easily. You started off with one building, you invested in another building, you upgraded it, and then you rented it out. And what are the most difficult challenges in the beginning? Finance, obviously.
Everything. No, so the first building, I think I was 21 years old, and when you're 21 and you go meet a big landlord and say, we want to buy your building, they look at you and go, well, you're 21 years, very unlikely you're going to buy the building. So everything was challenging, but we just pushed and persevered. We never needed that much capital in the beginning. We were buying very, dilapidated buildings. For instance, the second building we purchased, the rate and taxes were more in arrears than the building was worth. So we bought the building almost for nothing. I think it was 50,000 or 100,000 Rand, and we got council. We showed council at the time. They had a program that if you can show you're going to improve the area, they would write off the majority of the rates and taxes. That program no longer exists, but it was a great program at the time. And we went through that program. And so, we bought the building, let's call it for 100,000, 150,000 Rand. It wasn't big money in a sense. And what Warren Buffett always says, compound interest is I think the seventh wonder of the world, eighth wonder of the world, whatever. it's the same thing the way we start off small and just deal by deal, and we just got bigger, slightly bigger, incrementally bigger, and until it turned into what it is today. Just going back on the original story, after reading that book, I always remember thinking my goal was to just buy one apartment a year. So today I should have 20 apartments, say 20 years later. I think at the moment we produce, I can work it out, but I think it's one apartment every 3 hours. We producing, that's 7 days a week, 24 hours a day, something like that. So,
are you still with the same partners that you had in the beginning?
No, I started off with one set of partners. We still have we still have that company today. But what we were trying to do wasn't really aligned in terms of where they wanted to go and where I wanted to go. So quite soon thereafter, I went on my own, and very soon after, I joined up with my partner, who's still my partner today, Nick at Sappis. And when we started getting into the residential, which was, call it 10 years ago, we merged businesses. My younger brother and his partner, Grant Friedman. My younger brother's name is Greg Blend, and his partner is Grant Friedman. We put our businesses together. They had experience in the residential industry. We wanted to get into the residential industry, so we put our businesses together. We had commercial properties, they had residential, put it all together, and ever since then, that's been the four partners.
Okay, so let's talk about that, because I remember you might still own. I don't think you own them anymore, but you had Norwood Properties, you had properties in Rivonia, and in Sandton areas. There were office blocks along Rivonia Road and in the Woodmead area. That's a very big difference to go and then get involved with residential. When did that decision made? Was it because of the oversupply of commercial offices, your investment strategy? Did you think residential was more robust, that maybe one tenant could live in a residential building and it wouldn't affect your income or the stability of your investment? Or tell me, when did you get to that, and whose decision? How did you get to that decision or the point of investment?
You hit the nail on the head with many of those points. So what was happening was we owned these office buildings, very nice buildings, great locations, and we'd get a vacancy and we'd market the space that I'm making up a number, 100 Rand a square meter. And someone would come a tenant would come see it, and they'd go, no, not right for them. And then we would sometimes wait a month, 2 months, 3 months for the next tenant. And then we were unsure, do we keep it at 100 or do we go down to 80 or 70 Rand a square meter just to try to secure the tenant? And we never really knew, and it was always a bit of hit and miss and quite risky. And these were nice properties. Greg and Grant's portfolio residential, they had at the time more C-grade residential properties, and would see they'd get a vacancy at 8 a.m. on a Monday morning. I'm making up numbers again now. They'd put it on the market at 7,000 Rand rental, and if within 2 hours they never had a hit, they'd put it on the market at maybe 6,900, then 6,800. By like 2 p.m., maybe at 6,600, they'd get a tenant. And the market was so fluid and liquid, we saw like the risk profile for them with not even great properties was so low, and yet we were sweating with these office tenants trying to secure them. It became in our head almost a no-brainer that, wow, this residential seems like the way to go. It was that story with a few other stories that happened maybe simultaneously. When we were redeveloping these office buildings from C grade to A grade in Braamfontein, we're also watching guys in the inner city were converting buildings there. So we got a bit of a taste for it and saw what they were doing in the inner city. Simultaneously, I have an uncle who lived in America, in Atlanta, and I saw he purchased his first multi-family housing estate, which is essentially what we do today. That's where it's a large housing estate where one landlord owns the entire development, and it's not sectional title. One landlord owns everything and controls the entire environment. And I saw how that worked, and we learned how that worked. So it was all these kind of pieces of the puzzle came together, and made us think, wow, this is an amazing asset class. Let's try get into it in a big way. And then, the story from there, how we actually got into it, it began.
So, they say, you can have the most beautiful building in the heart of the best metropolitan. If it's vacant, it's for vanity purposes, it's not going to do you much good. But cash flow is sanity. So obviously you got that model right. Your first building, you obviously you say you joined the residential fund. You had a couple of those apartment blocks together with your brother and Grant. Your first conversion, acquiring the property obviously there must have been a challenge raising the finance to buy the property. I mean, because I know, I think I have an idea. I think it was the building in Sunning Hill was your first big one that you did.
It was our first big one, but it was a very cool story in the sense of our first conversion.
Okay.
Was we had a small little building in Ferndale, Randburg, maybe 1,600 square meters. And we had a tenant on a long-term lease. They outgrew the space very quickly, and we had a very amicable settlement with them. They left, and we were left. We had this vacant building. So we thought, what now? The only real option we had there was to convert it. Did a real like Bucky builder conversion to 36 apartments. And we finished the conversion, and this is where the risk lies in what we do. You only start leasing like 2 weeks before being completion, so you've got no certainty of income until the final 2 weeks. And we put on Property 24, private property, and we gave the phone number to a lady in our office at 8 a.m. And we said, people will phone you, just tell them about these apartments, take their phone numbers, and we'll take it from there. We're very inexperienced with how we're going to handle this. And I remember clear as daylight sitting next to my brother's desk at 10 o'clock. This is 2 hours later. My brother said to the lady, how many calls have we received? And she said 15 calls. I remember thinking, wow, 15 calls in 2 hours. Like, we don't get 15 calls in like 2 months for offices. And he said to her, wow, 15, that's great. And she goes, no, not 15, 50. And because of our experience with offices and understanding the property market, I knew if you're getting 50 calls in 2 hours for some little building in Ferndale, like, this is incredible. This is like having the winning lottery numbers, knowing you've got them and foreseeing the future of it. And it was like you were onto something massive. And from there, that's where we went. We said we have to go all in on the residential space. So we ended up buying the next door building. Actually, just fortuitously, we could purchase that. That was probably our first large conversion. It was about 180 apartments. Now built that into an entire precinct. We've built a new building next to that, and it went from there. And then after that, I think went into Sunning Hill. So, but it was that first little one, that first small step that really
you made it sound easy. I'm sure everyone listening here and watching is going to go and buy a building and try and convert it and think how easy it wasn't easy. I know the challenges that you had. We were part there. I remember even being skeptical when we discussed about the conversions of your office blocks to residential. Tell us about some of the challenges. Obviously the big one in Sunning Hill, there was a big number. You paid a lot. You didn't have a massive portfolio at this stage, but you paid a big number. I think it was around 100 million just to buy the property. Was that the challenges along the way there? And rezoning, how difficult was it or did they all come with the residential rezoning, or did you have to go through that process?
We generally have to rezone. So every step of the way is difficult. From acquiring the property is very difficult. The problem we have there is often, the landlords have the valuations high because when the properties were tenanted, the building was worth a lot more. But now that they're not tenanted, and what you touched on earlier is that it's only worth the income it can produce. And these days you sometimes can't find any tenants, no matter what the rental. It's just no demand from office tenants. So getting the purchase price at the right price that makes financial sense for us to convert is the first challenge. Once we've done that, the next challenge is we have to raise the finance. We're lucky now; we've got a great track record. We've had excellent debt providers to date in future growth. They've been really, really supportive, and they've helped us grow. But with the track record we have now, banks are always approaching us to provide debt. But for others, it is difficult to break into the market because banks generally want to see leases in place. And as I said, we've got to buy the building. You've got all your holding costs, rates and taxes, security, interest roll up on the actual property, and only right at and you're putting construction costs into it, which is probably 2/3 of the total cost of development, 1/3 being the property value, 2/3 being construction costs, very roughly. And only right at the end of putting all this money in, do you see if you can lease it? And if you ever get to the end and you can't, there's no demand, you've got a massive problems. That's where it's difficult to get the finance. But that's on the finance side. Then the zoning also is challenging. we've now developed really great relationships with the city. They understand our product. They've often used our product as like flagships to show other developers what should be developed. They like the higher density type living. It brings people that previously couldn't afford to live close to work now can live close to work. So we're very well aligned with the city.
That begs the question: why don't they do this private sector partnership? And I mean, by my understanding, there's a demand for over 10,000 extra beds required. I mean, almost every year, and it wouldn't touch sites. I mean, that's what the demand is. I mean, so if they need, and they've got these buildings in and around Johannesburg and other areas where they are vacant or they're abandoned or they hijacked, and they need to do something. I mean, do you think the city will start? I mean, they've tried at a certain level, but they haven't really got it right. But do you think they'll start partnering with you and giving you some buildings to develop for them?
We would love them to. I think it's a great idea. I think it would work very well. They've got the buildings.
But how's that for an investment for you? Would it still work? Because I mean, at the end of the day, the city brings a
I can't tell you the dynamics of how it would work and what value they'd put the buildings in at and what condition the buildings are in location, things like that. But in theory or practice, because they have a lot of buildings in some very good areas or, where people work, people want to live close to where they work. The city has those buildings. It could be a great partnership with us or others. It's definitely a good solution to the problem.
I had a walk through one of your newly developed and finished properties in Sandton. I mean, I was blown away. You know that. I mean, I was overawed by the experience and the product. I mean, I actually couldn't believe I was walking into an area that was actually, I would say, sometimes it was quite risky to even be there after 6. But the quality of the product, the size, just the finishes and the amenities, everything that you have at your disposal. I mean, from the Wi-Fi, the gym. I mean, the gym is a small size little, gym, a commercial gym. Could be a Planet or a Virgin. I mean, the gym is unbelievable. You had squash courts, you had cinema rooms, you had a swimming pool. I mean, a swimming pool. It was like a 5-star hotel.
Yeah. Four, you can even say 4-star, but
I mean, I promise you, it was absolutely. I didn't expect that. I mean, I knew I've seen the building before you bought it. I've seen it now afterwards. I mean, it really, for any young entrepreneur or business or any young person living in that environment, it was absolutely so beautiful. I'm saying, so tell us about the first building you bought and how it's changed and your improvements along the way, because. If this is where you are, I could just imagine where you're going to be in the next year or two.
Yeah. So, often every year we present to our debt providers, where we're at, and they always go, well, what were the major learnings or improvements this year? And we always go, there's nothing, 1 or 2 major things. It's always tiny incremental changes we make. I like the example on our first one when we put the door signage on. We went to almost Builders Warehouse and we got the number 1 and say 8, and you screw it in the thing, and it's like very makeshift. Now we have beautifully designed all our signage. I'm sure you noticed is beautiful. Everything
in brass and black and the name,
all the attention to details. So we're constantly refining the product, making it better. Where we're lucky, a lot of, unfortunately, because the economy has been tough in South Africa, a lot of developers that do 1 or maybe 2 developments over 10 years, 15 years, we're doing multiple developments every single year. So we got so many learnings that we can constantly be seeing where we're improving. All our decision making tenant driven. We constantly doing surveys with our tenants. Do you prefer a black tap or a silver tap? Do you want your bedroom in this location or this? Do you want more light coming to your bedroom or more light coming into your lounge? We constantly getting that information and constantly able to refine our product based on what our tenants are wanting, which is hugely helpful to have that information.
And then you also saw as you arrived there was like this management little area where to deal with any complaints or any like problems they have with the apartment or I mean there's that little thing in their room that they would just scan and they would send it through and there'd be a responsive time for something with maybe electricity or water or for whatever reason. But I'm saying surely that, I mean, I haven't seen that before. I mean, even in a hotel, you have to phone reception, you have to phone someone to try and come and help you. There's a whole team of people looking after. So the management, I think, is also very important, like I've never seen before. Talk to us about that.
We essentially, in the past you've had more recreational or non-professional landlords. Someone maybe a dentist and they buy 1 or 2 apartments and they own a sectional title and they're managing their tenants and they're happy with their income and the tenants lives where they live. We essentially institutionalizing the asset class. We're professionalizing it. You talked about the QR codes that tenants scan. If they got a maintenance issue, it pre-populates an email, sends it to the maintenance team. They've got a ticket number so they can monitor how long the issue's been outstanding. Got a full maintenance team on site. The matter will be fixed within at most 24 hours, but generally within 12 hours. The whole thing about that is ultimately we eat, sleep, drink, breathe our residential developments. How do we make our tenants' lives easier and better? That's all we think about all day. We're not thinking about anything else but that. And because we're thinking about that all day, that's where you're seeing these small things that are making our tenants' lives better, because that's all we do all day long. The whole ethos of it is, with this multifamily housing, is one landlord can control the environment. We don't need to, if something breaks, so say a fountain breaks, we don't need to go to a body corporate and get permission and 3 quotes. And this one's got a cousin who actually does fountains, and the other one's got his friend who wants to fix the fountain. We just go and we can make a decision in seconds, fix the fountain. This is who we're using to fit, which contractor we're using, and the fountain's fixed. We're able to, from a noise perspective, we can control the environment. All our security guards will have dedicated decibel meters on them. If there's a noise complaint, tenant phone security, they go to the apartment where there's a noise complaint, they take a decibel reading, they take a photo of the decibel meter, the apartment number. After a certain amount of warnings, we can actually evict the tenant. It's in our interest to protect 20 tenants opposed to having one noisy tenant. With a sectional title developer, a sectional title owner, and they need their income from their one tenant. It's not in the interest to evict their one and only tenant so that next door neighbor, which apartment they don't own, can be happy. That they need their rent to pay their bond, and therefore there's not much they can do with us. Our interest is in making sure everyone's happy, everyone's living in a great, peaceful environment. And that's very important.
So I mean, the sizes vary from like 35 square meters to 60. I mean, mainly 1 bachelors, 1 bedrooms, and
so we probably have from about 20 square meters to 40 square meters, okay, I'd say, on average. Our typical tenant is a 30-year-old, slightly more female than male. They have a university degree or college diploma and earning probably 30 to 35,000 rand a month after tax. So it's quite a high LSM tenant. And while the apartments aren't massive, as you touched on earlier, we've got incredible common areas. So at 30 years old, the tenants, you remember when you're 30, you're not looking to stay in your apartment all day long, watching TV. You want to be out and about and socializing and things like that. So, and being at the gym and watching movies and at the pool and braai areas, that's what we provide on site. So we've got private dining rooms. We even have, we have got full-time gym trainers working for us, and 2 free group classes, 2 group classes per estate per week. We've got running clubs. We have off-site events like hiking and ice skating, all that kind of thing. We try to create a whole community feel. People meet their neighbor, make friends, things like that. And that's crucial to what we do.
So, I mean, I don't want to shoot myself in the foot or say anything against the property market. I mean, we've seen, I think we're coming off a very low base with the residential sector, especially in Gauteng area, compared to other areas around the country. But I'm saying for a graduate, and he's going first-time job, and he's hitting his 20s and 30s, and, the olden days where we come from, let's say olden days, like you would want to go and buy an apartment.
Yes.
And invest in a property, and hopefully you would see capital growth. That hasn't been the case. I mean, it's completely changed. I mean, I think the freedom now and the flexibility of renting, accumulating some cash wealth, investing in other investments it's taken away a little bit from the demand for ownership in properties in the greater property area. But I mean, that's made a massive change. I mean, do you think that's going to continue? And do you think people are going to be buying properties in the future, like houses and things like that? Because I think they are actually not investments. I mean, let's be honest. A home is a liability. It costs you a lot of money to run and to everything. This is, you've brought something into the market that is actually, there was a massive gap, because I think it frees everyone up. How's that going to affect the residential market? I'm sure greatly.
Yeah, I think it will. We're seeing overseas, it's also the trends to rent opposed to buy. Myself, personally, I've also rented most of my adult life. I still currently am renting. I think it definitely depends what stage you are in life. One problem I've always had with renting is you never know if the landlord's going to sell the apartments and then maybe you get evicted because, well, they don't renew your lease because the new buyer now wants to live in it themselves or whatever the case may be, or they want their parents to live in the apartment. But that's what's great with being an institutional investor. When a tenant rents from us, they know they can rent there for many, many years because the property is built for rental. It's not built to be ever sectionalized and no tenants be evicted. I think, as I said, typical tenants, 30 years old, they're very mobile. They may be in Johannesburg this year and next year they want to go to Natal or Cape Town. They may change jobs to completely different areas. They may get married and have children very quickly or in a long time. But with the rental, that gives them flexibility. And people want flexibility. They don't want to be like almost chained down to one property where they now put all their money into it. They haven't had capital growth. They've actually had costs from agents, commission, and transfer fees and things like that they're underwater if they were to sell. And therefore, it's easier just to rent.
So tell me, are they signing year leases or 2-year leases or short-term leases?
It's generally 1-year lease, 12 months.
And if they decided they're going to move to Cape Town or Durban, I'm just asking you a question, and they got to go in 6 months' time, do they forfeit? The remaining part of the lease, are they liable for that?
The positive side of that is because we have properties throughout Johannesburg, we've actually got a product called Africrest Flex, where tenants can move within our different estates throughout the whole of Johannesburg at no cost, no hassle, just move from one estate to the next, which is awesome. It gives them a lot of flexibility. If they have to move to a totally different area, yes, there is a deposit, a penalty they'll have to pay. We normally discuss that with the tenant.
Okay. And tell me, the range is 6.5. So you say 6,000. I see in your receipt between 6 and 10,000 rand per thing.
Yeah.
And what happens if they're not paying, a defaulting tenant? I'd love to know from you this. How do you deal with that?
The amazing thing about this asset class and where it's hugely misunderstood is, and we've taken CEOs of large listed property companies to see our properties, and their first question is, how do you collect the rent? It must be a nightmare. How do you evict tenants? It must be a nightmare. And we're saying, of course we have some issues, but it's minor in our business. Our bad debts are less than 0.5%. Our occupancies are always 95% and above, sometimes even trading at 100% for multiple months. When it comes to evictions, we work with the housing tribunal very closely. They like the ruling court, if you want to call that, for these matters. We find them to be very fair and equitable. Sometimes the tenant can take us to housing tribunal, we can take the tenant to housing tribunal, and they will give a ruling, and we will live by that ruling, and so will the tenant, and they're normally fair, so the tenant understands they got to move. Because there's so much demand for our product, we're happy for the tenant to move on to another property wherever they end up going, because we've got huge demand for our product from new tenants. Whereas if you have, for instance, an office building and you have a problematic tenant and you need to say, goodbye to them, you can't just say, please be on your way, because you may take 6 months to a year, who knows how long to fill that space. With us, we'll fill that space very quickly. So it's a lot easier to have an amicable agreement with the tenant to part ways, because we know we'll fill it quickly, which is a big thing.
We spoke about the product. Unbelievable. We spoke about how you're improving it. We spoke about who's there, the lifestyle and the environment, kind of everything, the culture of the people, and just like a social hub. But I think the thing that stood out the most was the security.
Yes.
I struggled to get in. I was looking to phone you. I said, how do I get into this place? I think that's a massive factor that comes into every single one of your developments, because you want to feel safe when you get in there. You don't want to have to worry about anything.
Sure.
Was that like one of your most important?
It is probably the most important. As amazing as our amenities and facilities are, security is number one priority. People need to be secure, and we spend a huge amount of money on that facial recognition product, CCTV all over the place, lots of security guards on site. to date, thank goodness, we've never had any major incidents. I think like the biggest thing, someone thinks their camera got stolen, but other than that, it's been
Incident
free over multiple years and thousands of apartments. People feel safe, and that's crucial.
So tell us about your areas of growth around the country. Are you going to open and develop in Natal, in KZN? Are you going to go to the Cape?
Yeah. We're extremely focused on Johannesburg. We've just started our first development in Centurion, and we're looking for more properties there. We want to be wherever people work, major work nodes. So as long as we can get the numbers to work with the property we're buying, and we understand the zoning laws and restrictions and things like that in that particular area, we will look there. It's obviously harder to find properties the further away you go from where you live and where you operate from, but we definitely are looking in other areas.
Yeah, so I mean, I'll tell you a funny story about me. I mean, I did some valuations for my first boss on buildings, and it was a portfolio of offices, and I did the valuation for them, and I came back and I said, I'm struggling to attribute a value to this vacant building. It's been vacant for over a year. Yeah. And they said, must put it in at 0. I said, at 0? I said, but I'll buy it at 0. Yeah. He said, no, you won't. He said, it's going to cost you 250,000 Rand a month. So you can't buy it at 0. So I'm saying the properties that are vacant and it's a liability for the owners at the moment, it's costing them hundreds of thousands of rands in everything, and it's particularly in security, just to make sure that no one strips it. But then the rates, costs, and everything else that goes along with it. Therein lies the value of the property and the discount to what possibly a tenanted, rented out commercial office building will be. Mm-hmm. I mean, you're talking about developing between 5 and 10,000 square meters and even more bigger buildings. If that's vacant, it's a real liability for the property owner. But the rate that you pay it's worked out on your residual land, what you can pay to see according to your investment after the refurb costs. Yes. Surely you should be given more properties with the amount of vacant buildings that are out there. And I mean, they should be throwing properties at you to develop it with them, like maybe possibly on a JV partner. I know you're talking to a number of the institutions and REITs to do that, but you should be getting a lot more after they've seen your product.
I agree. I think a lot of these other landlords who have these office buildings, they just struggle either internally or with their external shareholders to almost admit that their buildings are worth a whole lot less than what they currently have them in their book at. And because of that, they almost rather hold and pray than just get rid of it and take that money and run. But, the truth is our average deals sometimes take, our average deals take about 5 years, because we go to them on day 1 and they must laugh us out of the office, and day 2, and by month 6, and by year 5, they agree to the number we offered them 5 years ago. Had they taken that number 5 years ago, they would have doubled and tripled their money since then, and not had all those holding costs, and, not had all that, the stress and the brain power it takes to think what they're doing with the building every day, and just moved on. But yeah.
I can speak for firsthand about that. I mean, the first time we met on the development, I mean, it literally took 4 years before you eventually concluded, and they could have got that away a lot earlier. Yeah. As an investor, as a person who likes what you offer, you're not listed at the moment. You're a private company. You're owned by a couple of shareholders. You're supported by some institutions that invest in you. Is there a possibility of ever listing? How do we invest? Is there any opportunity for the public to invest alongside you? Because, I mean, for me, I've always believed that, industrial is a safe bet. When a tenant moves out, that you don't have to do much. There's no real big TI. You just got to find another tenant that needs a space. It's a lick of paint here or there, and you replace them. And in the residential market, in an apartment block, 1 or 2 tenants can leave, and you can always try and fill it. It's really a robust investment. How do we, as the public, say, listen, we like what you're doing. It's really, and we see it's got lots of legs. What's your plans?
The truth is, we don't have plans to list. At the moment, we're happy to continue as we are currently growing. So I don't have any good news on that front for getting involved in Africrest. But
okay, well, so we're going to watch it closely because things can change.
Sure, of course.
I'm sure you've been sought after by a number of the financial institutions and
so
things like
that touching on that point is very interesting. Years ago, this asset class wasn't really known, it wasn't well publicized, and the institutions were almost afraid of it being residential and what I've discussed earlier on how do you collect your rental, how do you evict people. What's happened now in the last few years is it's really caught on almost like wildfire. It's becoming hugely popular. The institutions want to get involved, they want to invest, they want to lend debt towards developers, they want to own their own multifamily housing estates. I think the reason is they're seeing the as you said earlier, property is only worth the income it can produce. Because we've got thousands of tenants or hundreds of tenants per estate, the income is extremely solid. As touched on earlier, our bad debts are 0.5% of vacancy. Our occupancy is always above 95%. Our foreseeability of income is
predictable,
very predictable and very precise. We very rarely we don't miss budgets because it's that predictable, and the institutions want that, and that's causing huge demand. We've seen America's probably about 20-30 years ahead of us. In America, the asset class trades at a premium to retail, industrial, offices
because of
that predictability of income. But in South Africa, it's the opposite. In Europe, they're probably about 10 years ahead of us. And Australia's maybe 5 years ahead of us. But we're seeing where that direction there's been huge yield compression. Well, there's been some yield compression in the asset class. It's only getting more and more as more and more investors come into the asset class and push up prices for these assets. So that's very exciting for us, to be in that position. And we are also working hard on trying to educate the market about the asset classes, so people can see, people like yourselves. You said you walk through the building once it's complete and you're blown away by seeing what the product's like. It's people need to see it to understand it.
No, I mean, when I walked through there, it was like, wow, I mean, this is not a rented apartment block for a unit to go. I mean, could be anywhere in the world. I mean, even your design, I don't know, you use your interior design. I mean, it's the colors. I mean, the peaches and the pinks and the brasses and the golds and the blacks. I mean, it looks like you're in a retro 1970s like movie. It really is. I mean, we give them credit to whoever that did that. I'm sure you got a whole team behind you there. And then, I mean, how do you see Gauteng at the moment? I mean, with the property sector, we've come off a very, very difficult number of years. Obviously, we had COVID, we had the whole investment REIT market crash or crumble with the collapse of Steinhoff. And there was like this contagion, the spillover effect into all investments across every sector. But I think property got hit the worst. There was a lot of people that felt there were a lot of properties in the listed sector that were overvalued and the income didn't warrant what they were investing in. But it's starting to turn. I mean, the last year, I think there was over a 35% increase in investment in capital value across the sector. What do you view? Because, I mean, I'd love to see what you think going forward and what you see at Gauteng and possibly around the country on resi or also just property.
Yeah. Look, I think it's a broad thing and you got to look at each segment on its own 2 feet kind of thing. So, industrial, I think seems to be doing very well. Retail, I think is going to get hit quite hard with online, just getting stronger and stronger. And offices are we own from the old days still in an office portfolio, and I just see it's still incredibly tough. We get one big lead and we're all excited and I get all optimistic, and then the next day we lose another tenant who's downsizing or deciding that they can work from home kind of thing. So I think each part of the asset class, each asset class within the property asset class needs to be looked at individually. Overall, I'm very optimistic. I think there's a lot of positive things happening in South Africa as a whole. I think in Johannesburg, we almost hit such a low that people are demanding change now. And I think I'm therefore hopeful things will get better. I don't think they can get worse. I think people are at their wits' end and will sit in the next upcoming elections. I'm hoping that there'll be some positive results.
Someone recently told me that they who's in property, someone who's done exceptionally well in residential and commercial. They said to me they feel like it's 2003, 2004 deja vu with the values and excitement of investment, and they want to buy as much as they possibly can because they think that's the bottom. We've had massive challenges. I mean, besides everything else, I mean, at the end of the day, people want to put their money and develop and invest. I mean, you also got the increased costs of developing your own development costs or the construction costs and all that kind. But the low base that we coming off, I think there's going to be a massive, we're very positive, uptick in investment in the Gauteng area. I think that the potential in Gauteng, what we're seeing it now, and the demand for asking has increased dramatically because it's off of such a low base. You know, to go from 1 to 2 is much easier than in Cape Town to go from to 10 to 10.1, you know. And that's what we're really excited about. But your product is offering a lifestyle. You mentioned it, the retail under pressure. But if the experience is good and it's convenient and there's security, those products will outlast everything else, and that's what people are looking for. That's why the Sandton cities, the V&As, they're still working because the experience is great.
No, I agree. I think when I said retail can be tough, I think I'm talking many years to come with online and maybe more the C grade and outlying tougher properties. I think what the best, the cream of the crop will always do incredibly well. There'll always be great demand for that.
Your competitors, how do you differentiate between yourselves and them? I don't want to mention any names or anything, but there is competition. You know, we get them calling us all the time for properties and ask for demand to buy. What's your key differentiator?
A lot of our competitors, we all at different segments of the market. So, you know, ours is in the middle to higher end of the market. There's one or two competitors that are much lower end of the market. So we're going after different tenants essentially. That's where we differentiate ourselves. The look, feel, product's different. Our rentals are higher because the product's a lot fancier, things like that. I
want to just firstly, I think we've spoken about almost everything. I don't think we've missed much out of your journey's been incredible. I mean, we're watching you now. You got over 5,000 completed units. I mean, you got 10,000 in the planning and development stage. You plan to develop another 5,000 in the foreseeable future. You're acquiring buildings all the time. It's been an incredible journey, and we're proud to have been a little bit part of it, to see you do that. And congratulations to you and your team. I think you can all, and for South Africa, I mean, for Gauteng, and, you know, we've got young entrepreneurs changing the landscape and changing what we do. I mean, we're so happy to see you, and well done. And we're glad that you appeared on our show and to share that's something with us. And we'd like to see you in the future. Maybe in a couple of years, you'll be back on our podcast and we'll still be doing it, and we'll still be talking about your further development. So, Justin, from our team at Broll Auctions, we'd like to thank you for being here and sharing this insightful journey with us. And we really appreciate it. And thank you.
Thank you. It's been awesome. I hope we do many more deals together. I remember when I was thinking now when you're talking, when I was a youngster and I used to attend auctions many years ago. And, you know, then when I was that 20-year-old, and not many people take you seriously. And now to be sitting and talking to you, it really means a lot. So
I think it's unbelievable and incredible. And thank you. And well done to you and your entire team. I think you've done an amazing job. And I think this place is a better place for after all your investments than it was before you guys started. And I'm telling everyone, if they're looking to rent or they're looking to get into an environment, they need to go and see your offering and your product and your developments. They are absolutely and totally amazing. I was blown away with it. And again, congratulations. It's simply fantastic.
Thank you. Thank you so much.
Cheers. Thank you. If you have a burning question or want to add your opinion on the things that are shaping our country right now, add them in the comments below. And if you'd like to participate in this series, drop us a WhatsApp on 087 700 8289 or use Broll Broadcast as a tag. We'll see you there soon. Thank you.